Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. What's going on, Jeff? Good morning. How we doing? Just getting things popping here. Hope everyone is having a good Friday. Happy Friday. Right now, the futures, S&P's up 5, Dow's up 23, and NASDAQ is up 27. So we rolling. We rolling. You know, green again. Who would have thought? Kelly, how you doing? If you're here right now, say what up. Get my coffee on. Trying to wake up here. So, we had the jobs report come out here. Let's see here. Job market ends 2019 with disappointing 145,000 growth in payroll. So let's bring this over here. GB Nando, how you doing? December's payroll and wage growth mixed expectations. Labor Department said non-farm payrolls increased by just 145,000, while the unemployment rate held steady at 3.5%. Economic survey by Dow Jones had been looking for job growth of 160,000. The jobless rate met expectations, were staying at a 50-year low. So, I mean, sure we missed expectations, but unemployment's still at 3.5%. I mean, you know, a more encompassing jobs rate that includes discouraged and underemployed workers fell to 6.7%, the lowest it's been in records going back to 1994. So, you know, Dow made it. CNBC Dow futures turned negative after a disappointing jobs report, and now they're positive. You know, they like that. You know, CNBC. You know, they like that. They like that clickbait. You know. But what's going on this morning? So we do have Expiration Friday here. So, you know, you want to be careful. The market has been running pretty hot this last week, as you guys know. I mean, every stock has gone up pretty much over the last week by 10, 20, 30%. Jamar, how you doing? GB. So, the only stock that I have right now is BBBY. So right now I'm still holding. I have right now, it's a little bit cleaned up. I have the 13.5 put. I have the 15 call, and then I have this worthless 19 call that was part of my spreads. 19.5 call that was part of my spread. So we'll see how it goes. You know, I'm thinking for Bed Bath & Beyond, I'm thinking that it's going to come down to like the 12.5 range. But hey, so far it's up. It's up. I know that Jim Cramer last night had a full segment on why you should buy Bed Bath & Beyond. So that might have something to do with it. I'm not entirely sure. Sorry, fixing my chair here. Yo, Keith, what's going on? Yeah, we can look at CHK. Eric, what's going on? Boeing is down a little bit this morning. They actually had some news last night about some leaked emails and stuff. People complaining about the 737 Max, employees, staffers saying like management doesn't know what they're doing, and none of it was like safety related, but you know, it's some bad press. CHK real quick. So I don't really trade like Chesapeake Energy. I mean, it's big. Chesapeake Energy is big in the penny stock land, and obviously now it's below $1. I mean, it's not going well. Can't get above $1. Probably gonna revisit the 50-cent area. You know, it's not really a stock I would trade. There's a lot of opportunities in the market. You know. So the big thing for going into next week is the China trade deal, right? So Chinese delegates are supposed to be here on the 13th through the 16th. The signing is supposed to be on the 15th. So we'll see how it goes. One of the things that I was looking to play here was some soybeans slash ZS I'm looking at right now. So soybeans, you can go over to the one here. So with the trade deal, they're expected to buy $40 billion worth of soybeans. The soybeans that China purchased over the last year is down over half due to the tariffs, and soybeans are at the top of the range here. So I'm actually looking to possibly get into February or March calls. I'm looking at possibly getting the 1,000 strike. Actually, not the 1,000 strike, something a little bit tighter, or the 900 for protection. So we'll see. We'll see what these open up at and see if they get some volume. There's not really much volume on them this morning. So we'll see if these get some more volume on there, and I'll try the higher volume strikes like the 920 here. Not a whole lot of liquidity, but looking for some opportunity, or maybe I just buy some contracts outright myself. So I'm looking at some soybean futures going into next week. Also going into next week, since I don't really have any trades on right now, I'm looking to get a possible strangle on Alibaba. So Baba, IV is relatively low. We have the the 28-24 percentile on the weeklies, so relatively low. Probably looking at a 14-day. Try to do some sort of strangle play on Alibaba is what I'm looking at. So possibly towards the end of the day, might put this on. Whether the deal is signed or not signed, I think that Alibaba will push in a big direction. So right now, next week the expected move is only $6.50, and the following week's only as $8.90. So I think it's gonna move more than $6 in a week. So I'm gonna put on a strangle play. I mean, this week alone moved, like 8. So Shack, yeah, let's look at Shake Shack. Oh, what happened to my keyboard? So Shake Shack, they had a really bad earnings last quarter. I was actually looking to sell some premium in their earnings last quarter, and I didn't. Though thankfully I didn't do that, because they had a pretty dismal quarter. Right now, I think what the stock is looking for is just a catalyst. And right now, I am really happy that this came down. Implied volatility dropped. The bad news is, implied volatility is something that most traders overlook, and implied volatility is really important, because you can basically see the stock was staying the same. Implied volatility was ticking higher, and then it just dropped through the floor. So, people, especially like newer traders, don't understand that even though if the stock price doesn't change, the implied volatility goes down like this. That means the expected move is going down, which means the option pricing is going down. So this is like a premium seller's dream. But if you're buying premium, if you bought a call or you bought a put and you see this, it doesn't matter. It doesn't matter if you bought a call or a put. If you see this, implied volatility spike is up and just rips down like this, and the stock didn't move, those options immediately got a whole lot cheaper, and people overlook implied volatility a lot. So just to be aware, I do like Shake Shack down here. I do like that it's consolidating. Let me pull my chart down here. I do like that it's holding this line of 60-61. The question is for Shake Shack, when's it gonna pop? Is it gonna try to move up from here? It seems like 60-61 is fair value. So there's no buyers, no sellers. So what's going to drive the stock is the next catalyst. Let's see when the next earnings is. January 29th. So most traders are probably wait until the 29th. Then we have about 2.5 weeks or so for for that. So for Shake Shack, but I do like Shake Shack. They've been opening a lot of them out towards me, but I don't know if that means. I mean, it's always packed, but I don't know if that means they're making any money. I know, I know. Every time I go to Shake Shack, I drop $50. So it's not like the cheapest option. There's a lot of cheaper places in Chicago to get a burger, but I mean, I think the biggest issue. I mean, Shake Shack, the quality of the burger is good, the experience is good, the shakes are good, the chicken's not very good, fries are good. The price, I think, is the biggest driver. Applied materials. I mean, I would just be careful. Like for me, as being like more of a support and resistance trader, seeing it topping out here at like 63, I would just use caution. Like if you're looking at going long, I mean, this could pop up, but it's also, in my opinion, high risk to drop back down to like 57, 55 area. So I mean, this could pop up. There's no reason for it to really go down. Let me see here. They don't have earnings till February 24th or February. That must have changed. February 13th here. So I just get cautious. I mean, a better entry would be obviously if you're looking to get long down in this area. However, if it does break this, it could run. So I would probably, like, if I'm going to trade this long, I would probably set my alert for like 63, 50, 64, and then start putting on some long positions once it's breaking past this resistance here. And SDC, Smile Direct Club, they're just like, if you don't know what they are, they're an IPO. They like they sell you the frames to teeth whitening and also like teeth straightening and stuff like that. I mean, they're down over 50% since their IPO day. It does look like they're bouncing back. Could looks like it closed the gap here. However, I mean, this looks really good when it went from 8 up to 1150, but then it got hard rejected and it closed back below, this gap. So I would be cautious because, if you didn't take profits here, people, the bulls have been unnecessarily greedy. I would say in all of this, especially like yesterday on Boeing. Oh, we can talk about that later. But yesterday on Boeing, Boeing popped up. I took profits and it gave it all back. And now it didn't give it all back, but it went from 341 back down to 336, and now it's at 334. So you want to be able to take your positions off. Don't just because it's running doesn't mean it's going to run forever. And this is a good example. I mean, it went from 8 to 1150. I mean, you should be really happy with your gains here. Next thing you know, you have a hard pullback to under 10, and you're like, man, I should have took profits. And now you're kind of angry and agitated when you could have just took profits. I would have probably, if I was trading down here, let's say I bought down here at 850, it popped up to 11. I would have took profits. It would have ran. It ran up a little bit more. Yes, you would have been salty, but like for me, I wouldn't have entered another position. I would wait for it to come, see what happens, if it's going to hold this area or if it's going to drop back. Now it's dropped back. It closed under 10, under the gap fill. So it has a high probability to come back to 9 or 8. So just be aware. Netflix. Yeah, Jumar, let's look at Netflix. Yeah, Keith, I'm watching Roku. I'll look at Roku in a second. Netflix and Roku actually took quite a beating yesterday if we look at them side by side. I mean, yesterday, Netflix opened up around 340, 342, popped up to 343, closed down at 336, 335 area, and Roku ripped it open as well yesterday. I like Roku at around the 135 level, but then it dropped hard, went from 138 down to 131. It seemed like these both, like, even though the market was running really hot yesterday, these two stocks I was watching were really struggling, Netflix and Roku. And we're here again with another potential gap fill. I've been watching Netflix around this area, 338. It did pop up, but then it closed back under the resistance of 338, 339 area. So I don't like that. So I think for me, for Netflix, if we can come back down to 320, would be a better buy for me going long. Right now, I'm mainly focusing on long positions. I'm not looking to short it from 335 down to 320 just because you want to go with where you want to go with the momentum, right? So yes, this could pull back. This could pull back, but you're gonna have an easier time buying the dip than you are shorting the spike. You know, I mean, yes, you can make money going short, but I find that it's a lot like these days going short. It's a lot more stressful, and you have to be a lot more hands on if you're short because you have to really time your entries and your exits, and if you have other things going on that day, or you're not if you're not concentrating fully. I mean, being short right now requires your full attention because they could just rip that from you. They could just rip that from you as shorts experience this week with the huge dips and the huge climbs. Thinking of buying a VIX call to swing over the weekend. Things are weird in the world these days. Yeah, I mean, I think that the risk has mainly, with Iran has de-escalated. I mean, it doesn't seem like we're going to do anything more. Um, you can always hedge. The only time I would buy VIX calls if I was having a lot of capital deployed and I wanted to protect those assets. It's not necessarily like trading the VIX is not necessarily like not a lot of people trade it. I mostly used it for protection. Apps. I don't know much about the stock, but it looks like I mean we're decreasing and probably looking like a better buy around 6. I mean, yes, you get these pops, but they're very short lived, and then it was trading in a range trying to consolidate and it failed. I'm thinking it's going to come back around the 6 area. But Roku, Keith, now that we're looking at Roku, so Roku is currently 133. It's at the low end of the range. I do like this. I do like this setup for long. So, if it stays 131, 133 area, I actually might look to add a position in here today for, I might be looking at let's see here. Let's see what the 14 days might be looking at. Maybe the 131 call. 130 call, 14 days out. I don't really want to trade the weeklies next week because I don't know. I think that the trade deal is going to go through, but I'm not saying I'm nervous about it, but it hasn't happened yet. So if it hasn't happened yet, it hasn't happened. I mean, I think it's going to happen. Everyone thinks it's going to happen, but I don't know. I just gotta. I don't want to be that guy that goes, "Oh yeah, we're gonna have the trade deal signed on Wednesday, go 100% long," and then a tweet comes out and saying, "You know what? We're gonna raise tariffs. Screw you guys." I don't know. I don't think that's gonna happen, but what do you guys think? You guys think we're gonna have the phase 1 deal signed on Wednesday or no? That's what I want to know. Yeah, I mean we got till Wednesday, so I'm thinking for next week it might be more of a premium selling week where we kind of consolidate a little bit. They could walk out next week just as easy. Yeah, I mean they could say, you know what, I don't really want to buy $40 billion worth of soybeans. Take it easy. I'm out of here. I don't know. I mean, they've been trying to sign some sort of a deal for a long time, and now that they're coming together to the table, they could easily, like Keith said, easily walk away from the signing table, But I mean, I hope not. Because I hope that they sign the trade deal mainly because it takes one less variable. I mean, trading is hard enough. And then when we're trading with the variable of a trade war, trade deal, and all those things, it increases our risk as traders. So I hope that they have a deal, phase one deal, they sign that deal. And not only do they sign it, but that they honor that deal. Just because they signed it, they may not even honor it. You know what I mean? And then that could bring on something else. I'm not trying to be, pessimistic or negative, but I'm trying to stay realistic. Anything can happen with the deals. Anything can happen in the markets. As you can see, we were bombing people last week, and we ripped higher in the markets, higher than ever before. And I mean, I was doing some research on this, and actually, in past events, war is generally good for the markets. I'm gonna. I'm probably looking to do. I was doing some research on it. Probably looking to do a video on it, but I would like for them to have the trade agreement so that way it takes one less variable, because when the trade war tensions are high, you always have this thought in your mind is like, okay, I'm gonna go into this position, but what if this happens, or what if this happens? How can I protect myself? How can I get out of this alive if it goes against me? If at some point in time they say, hey, we're going to raise tariffs next week, we're going to raise tariffs next month, we're going to pressure them on this. And, that's market wide. So I definitely think that we need to be careful. But I want them to sign the trade deal so that way it's a lot easier. As you can see, without all the trade war news, trading has been a lot easier because we haven't had that variable, and we haven't had like the media outlets, doing article after news segment after news segment saying whatever, God knows what, putting fear in the market, algo's going crazy. I mean, it's a variable that I don't like to trade with. When you're trading options, especially when you're trading options, you're looking to reduce risk as much as possible. So if we don't have the trade war news and the tensions with the trade war, we're going to have one less variable to account for, which makes it easier in our calculations. Rob, what's going on? Selling premium. So Jumar, just a quick options 101. When you buy a call, that means you're long. However, you can short a call, which means that you're selling premium. So when you buy a contract, someone actually wrote and sold that contract to you. So you're hoping that contract will go up. The premium seller on the other side of that transaction is hoping the contract goes down, so they collect the money. Daniel, what's going on? So you have to, if you don't understand the two sides of option writing and premium buying, premium selling and premium buying, if you don't, I suggest you research that and make sure you lock that down, because ignorance in options trading is the number one way you'll get screwed, because someone's going to take advantage of you. Someone like experienced traders, algos, someone like me that's experienced will be selling you expensive contracts, and people scoop them up if they don't understand what it all means. Daniel, mate, still paper trading, trying to get my mental right. Yeah, I mean, I've been really focusing on my mental state, because your mentality, you can know how to trade, but your mentality will make you positive or negative on the day, on the week, on the year. Sorry. GB, SWKS, sorry. Real quick. We got markets opening in 6 minutes here. Skyworks. I mean, it's just insane here. It's back at 121 right here. So for me, this would be a hold to see if this still retraces. Yes, it's coming back up to 121, but it's been, what this could happen here. I can draw a quick trend line here. Essentially what you want to do is, let me close this out. Essentially what you want to do is, this is a negative looking trend line where it's going down. You want to pop above, and then you want to go long. Right now it is opening up above that trend line, but pre-market numbers aren't that accurate. So you want to make sure, this could open at 120 and stay below the trend. But right now up here it is descending. So just be careful. Okay, and then QRVO. So yeah, this is another one. I'm just waiting to see what would happen here. Looks good. A lot of consolidation this week. So even though the market's been running, this has been consolidating, and premium is going through the roof right now. So just be aware of that. Might be a good time to start selling some premium in here versus buying, because if this consolidates like a 110 or 111, it's just gonna crush this premium straight down. So let's see what we got here. They don't have earnings on February 6th, so the market is anticipating something big is happening with the premium up here, but it should come back down to the 30 range if it stays flat. But the market is anticipating some sort of big news. All right, so we got about 3 minutes to the open. S&Ps are up almost 7, Dow's up 34, NASDAQ up 30. So NASDAQ has definitely been the stronger out of all the stocks, out of all the indices. We got Bed Bath & Beyond, so we'll see what happens here with Bed Bath & Beyond. I mean, this could pop back up to 14, 15 maybe. I don't know. Their numbers are so bad. My target is 1250 on Bed Bath & Beyond, so we'll see if that happens. I do have till next week. Like I said, going into next week, I'm looking, like right now I'm rocking with one position. I'm only doing like 1 to 2 positions at a time, just because there's some uncertainty next week. We need to be safe. We need to be careful. We want to make the right decisions. If you guys haven't yet, do me a favor, hit the like button on the video. I'd really appreciate it. If you haven't said hi, say what up in the chat. We'd appreciate it. See who's all watching. Definitely glad you guys are here. Thank you so much for supporting me in the live stream, moving the live stream. When we moved the live stream channel, there was like 3 people here. Now there's over 30, so I definitely appreciate that. Thank you guys. Lion, what's going on? How you doing? David, ZGM. Saeed, what's going on? ZGM. All right, real quick before market opens. Did you just mean good morning? There's no ticker ZG. Are you doing gold futures? Michelle, what's going on? Buzz. John, appreciate you. Thanks for watching, man. Lion, I'm good. I'm ready to start the weekend. Trying to see what happens with Bed Bath & Beyond. I'm looking, like I said, if you guys weren't here early in the stream, I'm looking for a Alibaba strangle for next week, and I'm looking to trade some soybean futures is my goal. My goal. Keep it simple. Boeing, I want to come down to the 330 area. Right down in here would be ideal for me to get long some Boeing again. So, market's just about to open up. As always, you guys take it easy. Have a good weekend. Stay safe. Stay green. It's us versus herd.